Tom Leahy, you are head of EMEA Real Asset Research at MSCI. Thank you for joining us on BiTV.
Thanks. Yeah, happy to be here.
The MSCI Real Estate Market Size Report, which was published earlier this week, reveals something that, as a French-based media group, I thought was really interesting. The fact that the market size of the Americas grew by 0.6% to 5.9 trillion US dollars in 2022, while the EMEA market size declined by 9.8% to 4.1 trillion US dollars in the same period. Maybe to start, how do you explain this diverging trend?
Yeah, so I mean, the market size report is obviously it's data up until the end of 2022. And if you think about what changed over the course of that year, you could have a couple of points. Firstly, there's a currency impact because all the market size estimates are in dollars, so that has an impact on ex-US markets, particularly if they move up or down versus the dollar. So that has an impact. And then the other thing to say is there's been a more rapid revaluation of some of the major European markets. If you think about the change in property capital values over the 12 months to the end of 2022, there was a pretty big revaluation in the UK, but slightly less so also in Germany and France, which are together are the three biggest European markets. So I think that greater revaluation versus what's happened in the US is the major reason behind that, along with some currency impacts as well.
Okay, thank you. MSCI was busy this week because you also presented yesterday the European Capital Trends report for Q2 2023, which showed that transaction volume actually fell 58% year on year in Europe. Maybe although no sector seems to have been spared, which were the ones that were maybe the most affected by this downward trend?
Yeah, I think you have to really look at the office market in particular. Actually, the number of office sales, so that's the number of buildings that sold in Q2, fell to an all-time low. So our European data starts in 2007, and this was the worst quarter ever for the sales of office properties. So the office market is clearly suffering under the sort of the twin attack of cyclical and structural effects. You've got the cyclical impact of the rapid rise in interest rate, which is obviously causing property to reprice and makes pricing very difficult. And then you've also got the structural impact of the shift to a hybrid model and what that might mean, or what that means for office occupancy moving forward. You've already had announcements in the press recently of large occupiers significantly downsizing the amount of floor space they're planning to occupy in the near future. And so that's clearly impacting demand for offices, and particularly the older buildings, lesser quality assets, ones that won't likely meet occupier requirements, but also legislative requirements, especially with regarding building carbon emissions as well.
Okay. Your report also shows that Paris was the most active market in Europe in H1 2023. As I said earlier, Businessimo is a French media group. So obviously I have to ask, because Paris was well ahead of second place London and third place Berlin in your report. What explains the resilience shown by the French capital, maybe compared with other major European markets?
Yeah, it is interesting. I think the activity in Paris was, I think you'd possibly say, relatively unusual in terms of the patterns of buying activity. So you had some very substantial deals involving occupiers or owners of real estate who aren't sort of investors in property, so to speak, aren't professional investors. So you had two luxury goods groups, LVMH and Kering, acquiring very substantial properties in central Paris, right in the core of the QCA. You've also got the French Overseas Development Agency, Ford acquiring a very substantial office building for their new headquarters, also in Paris. And you've also got IKEA, also active in Paris as well. So those are groups who aren't necessarily traditional sort of institutional investment managers who would be the normal mainstay of the market. So volumes have held up well, but the patterns of activity are quite different to, I guess, what you'd say is more normal in inverted commas market conditions.
Okay, thank you. Tom Leahy, thank you very much for taking the time to speak with us. It's always a pleasure to have your insight on BiTV. Thank you all also for being with us, and we'll see you soon on BiTV.
Thank you.